Hi everybody, it's Terry Ryder from Hotspotting. Every week on Saturday morning we publish our weekly free newsletter called The Week in Real Estate, or The Wire for short. If you're not getting it, you can easily sign up for it. It's a free service. Go to the homepage of the hotspotting.com.au website and click on Yes Please and put in your details. You can receive The Wire each week on a Saturday morning. It's a great way to stay informed about what's going on and all the major issues around residential property around Australia. It includes the 5 or 6 main stories of the week, plus podcast and a video broadcast on one of the subjects that I've focused on during the week. This week there's been a bit of a focus on a regional Australia and markets there, because as the 2 biggest cities, Sydney and Melbourne, wind down with their previous property booms, the focus is swishing out here, and regional cities are some of the places where we still have very, very strong markets or rising markets. There was one of our major stories this week in this week's edition of The Wire talks about the pain and gain report, which focused on properties sold in the December quarter and looking at how many of those had sold as a profit in terms of what the vendor had paid when they were the buyer previously, and found that across Australia 91% of properties that sold in the December quarter sold for a profit, and about 9% sold for a loss. But it made the point that regional areas in particular were looking particularly strong. They were gaining in strength and were having a rising percentage of properties that were selling for a profit as opposed to selling for a loss, particularly locations close to Sydney and Melbourne, and a trend that we've noticed also, rising markets in areas within an hour or so of those major cities. Melbourne, particularly towns and regional cities to the north, Bendigo, Ballarat, smaller hill change towns within striking distance of Melbourne have been doing pretty well. And close to Sydney, Newcastle has probably been the strongest market in Australia in the last 12 months in terms of price growth. And not coincidentally, our report of the week this week is our top 5 regional New South Wales hotspots. We believe that right now the strongest jurisdiction in Australia is regional New South Wales in terms of the number of markets that are rising and showing potential price growth. So that's a report maybe to check out. There's a little bit about that in this week's edition of The Wire. There's also a video broadcast that I did earlier in the week focusing on certain regional cities, which were Ballarat, Victoria, Dubbo, New South Wales, Townsville in Queensland. And the thing that they have in common is they have got particularly strong growth in their employment sector. Jobs are growing in those 3 regional cities in particular because those economies are growing and expanding, and out of that comes stronger property markets. So it's a very important factor for you as potential property investors or existing property investors to be aware of, that one of the strongest things to look for and trying to determine where the good places to buy is what's happening in the local economy. Are jobs being created? And in the cases of Ballarat, Dubbo, Townsville, yes, very much so. They're leading the nation in certain respects in terms of jobs creation and the low level, in particular, the low level of youth unemployment. Some of our other stories that we feature in this week's edition of The Week in Real Estate, The Wire. Interesting item which shows that homes that are regarded as being sustainable in some way, have some sort of sustainable feature, sell faster and for more than those that don't. Some research conducted by the Queensland University of Technology in conjunction with PRD Nationwide has found that homes considered to be sustainable can sell for 10% more than other homes, non-sustainable properties, and 13 days faster on average. So it's interesting that the buying market appears on the basis of this research to value those sustainable features. Sometimes it might be solar panels, it might be some kind of alternative wastewater system, but it doesn't have to be items like that can cost quite a bit of capital up front. It can be as simple as using non-toxic materials in construction, or having a kind of an open plan floor plan in your home which allows for cross ventilation. Features such as that are regarded as sustainable and can attract buyers, and according to the research recently completed, homes like that sell for more and sell faster. A story out this week also based on the latest figures from Standard & Poor's, one of the major global ratings agencies on mortgage delinquencies in Australia, and it always stands out for me that we have such a low level of what they call mortgage delinquencies. Those are mortgages where the household with the mortgage is behind on their repayments. Right now, almost 99% of households in Australia with mortgages are paying on time. In fact, other research shows that most Australian households with mortgages are ahead on their repayments. It's just 1.3% of households with mortgages that are in some way behind on their repayments. So the percentage of mortgage delinquencies has recently risen slightly, and some media has made a big play of that, turning it into some kind of crisis, but really it's a very, very low percentage of the total, and I think we're in a very comfortable position. Another story that touches on similar aspects was an address to a UDIA conference in Melbourne by the head of ANZ Bank, Shane Elliott, who was talking about where markets were at and where markets are heading in the biggest cities. And Shane Elliott from ANZ felt that the markets in our biggest cities, Sydney and Melbourne, which are past their peak and obviously winding down after Burns, feels that what they're headed for is a soft landing rather than some kind of significant price correction. He made the point that while Australian households, generally speaking, have a high level of debt, they also have a very high level of assets. And this is a point that I often make, that the difference between our debt levels and our asset levels are quite high. That means the equity that we have is at record high levels, higher than it's ever been in the history of this country. So while debt is high, assets are even higher. And that's one of the factors that Shane Elliott from ANZ raised as part of his rationale for believing that our property markets around the country are looking fairly comfortable, even as those two biggest cities' property booms wind down towards what he is foreseeing as a soft landing. And there's also a story about the latest jobs data showing that there were a significant number of new jobs created around Australia in February. The unemployment rate is still hovering around 5.5%. So fairly comfortable, but not definitive of a national economy that's going gangbusters. And according to most analysts, this means that the level of official interest rates is likely to remain pretty much on hold at a record low right throughout this year. So most forecasters are suggesting we're not going to see any change in the cash rates, the official interest rate controlled by the Reserve Bank, anytime this year. So interest rate levels are going to stay pretty much where they are officially, but of course around that you've got the major lenders lifting them, dropping them, moving them sideways. It's very much a movable feast, changing pretty much every day. And you've got to really have if you're a property investor, you need a good mortgage broker on your team to keep track of the various permutations and changes, which are almost daily in terms of where the best interest rates are, because right now the major banks, having satisfied the APRA requirements that were imposed in April last year, are now back competing very strongly for the business of property investors, including for interest-only loans, and the interest rates on offer are particularly attractive, and they're moving around regardless of what the Reserve Bank is doing with the official cash rate. So that's the highlights in this week's edition of The Wire, the Week in Real Estate, which we send out to subscribers every Saturday morning. If you're not getting it, it's very easy to get it. It's a free service. Go to the hotspotting.com.au homepage and you'll see a panel there where in large letters it says, yes, please click on that, put in your details, and you can receive this very useful weekly report to keep you informed of all the background issues of importance about what's going in real estate, including some podcasts and some video presentations. If you prefer to get your information in that format, we provide for that some interesting material we put together this week. So that's it for now. Terry Ryder from hotspotting.com.au signing off. I'll talk to you again soon.